What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. And today we have a wild day in markets, which I'm pretty sure you're probably already aware of by now. I put out a video earlier this morning trying to give a quick recap, and in this video we're going to kind of dive a little bit deeper. So I'm not sure how long this video is going to go, but we're pretty much going to assess all different aspects of the market to get an idea of if we're at some type of pivotal moment. I've got the Dow Jones Industrial Average pulled up in front of us. As we can see, we're clearly seeing a big fall over here in the Dow. Something we've monitored for quite a while over here on this channel has been the Dow Jones in relation to the 1920s, or the roaring 1920s, and that what has happened since the great financial crisis is nearly of an equivalent bull run from what we saw in the 1920s prior to the Great Depression starting. Today, we clearly have some serious price action. There's a lot of worry out there. If you take a look at a lot of the assets out there like Netflix or PayPal or Spotify, you would say, hey man, those bubbles have popped. I think it's very possible many of them have. But the bigger question out there is, has the actual stock market popped? Is it actually crashing at this point? What we know about cryptocurrencies and what we know about Bitcoin is that it was incepted down here at the bottom of the great financial crisis. So the bottom of the great financial crisis was already in when Bitcoin was created. So it's really had the luxury of being in a bull market the whole time. And the big question is, when is this bull run going to come to an end? And has it already? Now, it's easy to sit here and say, look, it's all over, whenever we're having a big scary moment like we are today. There's obviously a lot of news action going on today out there in the markets and geopolitical events occurring, but we'll look at a lot of different things in this video to get a better landscape view of what's happening in all markets, or at least the ones that I typically keep my eyes on. One thing we know is that when the Dow Jones was going in this big run up back in the 1920s, there was this big pausing period that happened in here where there was a lot of volatility taking place prior to it eventually having its final excessive move to shoot up higher. So we've seen volatility like this happen in here, but the big question is, are we going to have that one final excessive move happen in here and take all markets up with it? When I released my video earlier this morning, we were running through a series of tweets that I had done on Twitter, and I apologize if you're having a hard time seeing those on Twitter. For some reason, those are getting blocked out sometimes. We just kind of have to deal with whatever's going on over there. That's why I made a video going through all of them as well. But essentially, if this range were to remain in here, you'd be looking at a bottom area of around $32,000 for it to remain within that range. One thing that is also very interesting about this range that's happened here for the Dow Jones Industrial Average, or at least for this correction that's happened in here, is we can see that the first wave down in here took us down to about 33,100. The retracement took us precisely back to a 702 Fibonacci retracement. Then we roll over and we have another leg, which is typical of A, B, C corrections and having waves nearly of equal length in here. When we were going through the C19 crisis and we were having our massive sell-off occur down in here, I was talking about, hey, we have a double tap on top of the all-time high. We have a breakout, back test into the bull flag with a V bottom. But usually with these things, you don't just kind of go out a little bit higher and then turn over and crash on yourselves. There's usually a little bit more energy to these things than what we've seen. An example of this would be like Bitcoin's price chart back in 2017, in which it had a similar situation. A breakout after a double tap on top of an all-time high with a back test into the bull flag with a V bottom. And the price area we would be at right now for the Dow Jones in relation to Bitcoin at that time would be like being right there. And that we haven't really gotten that far. We can kind of take a peek at this and see what happened in here. We can see there was a big volatile eruption that occurred also with an A, B, C correction happening. But either way, from a structural perspective and from the run-ups we've seen in the Dow Jones before, neither one of them point to it being the actual literal top of the Dow Jones Industrial Average. Doesn't mean it can't be. The only thing I can do is use all the tools and the structures and the things that we've seen before and say, has it hit these things, right? Have we hit full extensions over here for the Dow Jones? We have not hit full extensions. Have we matched what previous run-ups look like? No. But have we mirrored it pretty similarly? Yes. Was there also a volatile area that took place right in here? Yes, there absolutely was right in there. And in these structures, like we saw with Bitcoin, even though this one doesn't show it, usually a couple more waves up to go beyond that moment. However, looking at this one, it only shows one more wave. So if we start dipping lower than this, well, then we start saying, okay, well, we don't really have any type of structure to go based off of at this point. So for this thing to remain valid any longer, we pretty much need to be holding these levels. But like we mentioned, this is a pretty normal structure that's happening in here. You have an A, you have a B to exactly 702, and then you have a C with these waves being of equal length. Nearly, at least. Looks like there's still a little bit more can go. Ironically, closer to that 32,000 level. But it's kind of funny when you think about it. Nothing about what's going on in this geopolitical landscape of what's happened today is funny. My hearts go out to. I can't imagine living in that world and being there in that world. But what's wild about it all is if you kind of take a peek back and say, how long has this structure been going on for here? We're talking about this taking place since the very beginning of this year. Here we are at the end of February. We have a long A, we have a B back to precisely the 702 Fibonacci retracement. We get all the way down here, then boom, the big, huge event happens that scares everybody terribly, and it happens to occur at a wave of equal length after an ABC, after a 702 retracement. It comes in right down in here, right? I mean, that's a little odd. It's not like the market was moving in a straight up line and then suddenly the floor fell out from beneath it. It's that it was in a very clear structure with a 702 Fibonacci retracement. And then we come back down in here and the event takes place down here. And so there's been some interesting things that have happened in other aspects of the market as well at the exact same time when we look at some commodities, like when we look at oil and we look at silver and we look at gold. And one thing that I find very interesting about gold in here is that, well, we can see now since the markets have opened that gold has nearly lost all of the gains that it made throughout the night. All the worry and the fear and the flocking to gold has all stopped. And if we look at what has happened here with gold over the course of the last years, you see it runs all the way up. It has a big pullback right in here, right? Well, let's throw some Fibonacci retracements down on gold and see what happened in here. And we can see what appears to be, at least at this time, is something of an ABC style correction. And we can see how this ABC correction gets us right back there to a 702 Fibonacci retracement. But think about how crazy that is, right? Think about that this has been going on since August of 2020. We're in February of 2022. It takes this long for this whole thing to play out. During this time, there was no fear buying of gold. There was no FOMO buying of gold, panic buying of gold. And then as the year and a half plays out, as we get this whole structure going on, the literal day that we get back to these price levels, there's a geopolitical event that causes fear and panic and gets people to buy gold at the 702 Fibonacci retracement. That's odd as well. Another thing we can look at is the US dollar currency index, and we could see that the DXY, or the US dollar currency index, had its big fall there in 2020, and then in 2021 rolling its way back up, getting back to the 618 Fibonacci retracement level. This morning, it pinged the 618 Fibonacci retracement and has since stepped back. As we've been following over there on Bitcoin on what corrective and recovery structures look like before they turn over, the dollar has had a very similar structure in here to what happens in these types of reversals, and this is the price area that those get to. And today, as gold hits its 702 retracement, as the Dow Jones is in a 2-month corrective structure and has waves of equal lengths after an ABC correction where the B leg hit the 702, we have the dollar also hitting the 0.618 after a recognizable style of corrective structure with a retrace structure. Another noticeable thing I pointed to earlier today is what's going on with oil. We know that in 2014, oil had set a series of higher lows for 5 years, and in 2014 set its first lower low, and then eventually went into a breakdown. Over the course of the last couple of weeks, we've been fighting against that price level that was the breakdown level back in 2014. Overnight today, we were able to break through it. Since then, it is now pulled back down to this level. But at this exact moment, we were able to break through the actual level that broke down oil 8 years ago. While there is still a series of headwinds up ahead of it, that was notable to see that the breakdown level was cleared through during this event. So the things that we've noticed so far today have been that the US dollar currency index pinged the 618 Fibonacci retracement after having a big fall over the course of 2020 and then rolling back up throughout 2021, which is something similar to what we've seen happen before. Gold smacked into its 702 Fibonacci retracement level and has since lost almost all of it from all of the panic buying that occurred. And over the course of the last 2 months, the Dow Jones has been doing what appears to be an ABC correction at this time, with the B leg perfectly nailing a 702 Fibonacci retracement And as we get into this final wave, at least of equal length, we get a big fear-driven event occur. 2 months of downward action, ABC with the 702, at the very end, a fear-driven event, while the Dow Jones still remains within this volatility range that we've seen before in bubbles of this magnitude. Meanwhile, there have been several equities that appear to have popped over the course of the last several weeks, including PayPal. I had responded here to Blockchain Trucker, who is commenting on not Jerome Powell in regards to PayPal. And I'd stated that to me, PayPal looks like a standard bubble pop. And when you see bubbles pop like this, very often you'll see about a 70% fall and back into this V-bottom style structure. And as you can see, I had drawn my box on where it seemed likely to me that we could potentially see some relief in PayPal. Typically in these things, we see a 100% bounce, and then still the longer downtrend will continue for these things. But that it was nearing the ending phase of what bubble pops look like. And what we can see is during this event that PayPal reached down into that capitulative box, where it has now lost nearly 70%, 69.52%. Now, if this doesn't look familiar to you, maybe it does now, because that's exactly what Bitcoin did back in 2018 when its bubble initially popped, is that Bitcoin ended up falling about 70% right in here, 69.64%. And where did it pull back into? It pulled right back into the V bottom that we were just talking about earlier in this video, right? So that was this V bottom coming back to backtest this. Well, what is this right here for PayPal? What time period is that? That's March of 2020. That's when all the C19 stuff was happening. That's when the V bottom came out and happened in here. There's its double tap and there's its backtest into the bull flag, and then off and away it goes, that you pull back into this level like we saw happen over here for Bitcoin in the initial popping back in 2018. And so we're seeing assets also reach their capitulative pricing in equities based on things we've seen happen before as well. All while the DXY hits the 618 retracement, gold hits its 702 retracement, the Dow Jones creates a wave of equal length, ABC, after a 702, C leg equal to A leg. All of these things all lining up at the exact same time with a big scary event occurring on the day of it happening. So another thing to add to the book of odd, it got there to the capitulative part right when all these other things are occurring. And right when the Dow Jones is reaching out to its depths of what these moves can look like, and the depths of what we saw happen back in the roaring 20s. So then that brings in Bitcoin. So what's going on here? And right, why does all of this other stuff matter with Bitcoin? But this is what I've always done. I've always kept an eye on what goes on in the rest of the market to try to make sense of everything. A lot of times people say, hey, can we just focus on the XRP price chart? But I'm over there focusing on Bitcoin. I'm focusing on the altcoin market. I'm focusing on a ton of things, because all of these things are interconnected to each other. And for me, it's always about trying to make sense of all of it and what the big picture is telling us. And I would say something that we all learned today as well, is something that I talk about all the time, is that Bitcoin and cryptos are tied to the equity market. They're tied to the stock market. A lot of people like to argue that Bitcoin's a safe haven asset or a store of value asset. And I think that's just because Bitcoin go up is why it's called store of value, because it's done so well since the great financial crisis. But the reality is how well it is tied to the stock market in regards to its volatility and market cycles. And what we witnessed throughout the evening is, as the stock market was selling off, cryptocurrencies were selling off at the exact same time. But what wasn't selling off? Gold and silver and platinum, they were all flying during that time, and the dollar was flying during that time, during a moment of uncertainty. Bitcoin and cryptocurrencies were selling off with equities. Bitcoin and crypto were not moving up like commodities were. And that's why I post about this. And this is from back on December 1st, right? The US stock market indexes, including the DJI, SPX, and NDX, are all nearing their 4.236 Fibonacci extension. Here's a friendly reminder to show Bitcoin's performance with the Dow Jones. Bitcoin has never experienced a real stock crash, only flourishing in a bull market. And I had taken the time to go through every bull market of Bitcoin and every bear market of Bitcoin to show that the bull markets occurred during breakout time periods for the Dow Jones, and the bear markets occurred during periods of consolidation for the Dow Jones. And this time period has been no different for Bitcoin, being flat for a year now in a huge volatile range, while the Dow Jones has been in a huge volatile range. But the question remains, is Bitcoin broken? Has Bitcoin lost its structure that it's been following for 5.5 months at this point? It has dipped lower. Has it set a new low? No. Is it lower? Definitely. We saw in the circumstance of the DXY how low it eventually went in there. Still got all the way back up to the 618 Fibonacci retracement. So is the structure broken? Very hard to tell. It has not set a new low. Does this dip right here on total 3 or the altcoin market excluding Bitcoin and excluding Ethereum break this structure because it dipped just below the 702 Fibonacci retracement? It's really hard to tell. I would say the structure on a lot of these altcoins isn't pretty. We can see that total 2, the one that includes Ethereum in it, so it's the entire crypto market excluding Bitcoin only, has held that level so far. XRP is still holding its a bigger structure that it's had for about 9 to 10 months. With its crash, retrace to 618, reaccumulation, this has still held with the lows not being taken out. And if we went through the whole list over here on the right side of the screen, we'd see about half of them have held their lows, half of them have not. And the question bears, is this the capitulative phase of the market? Are we seeing the full-blown capitulation in the stock market? Are we seeing the capitulation in Bitcoin? Are we seeing capitulation in the altcoin market? Or is there further down to go? I would say signs that capitulation has happened would be that the US dollar currency index hit the 618 Fibonacci extension while people are flocking to the dollar in fear. At the same time, on the exact same day, gold hits its 702 Fibonacci retracement and people are panic buying gold, while the Dow Jones does an ABC with waves of equal length after hitting a 702 Fibonacci retracement. And we see some equities hitting their capitulation level precisely at this time. And that panic selling was so high that even the stable coins were worth more than $1. Binance USD was worth $1.05 because the demand for US dollar pegged stable coins was so high during that moment. Thanks to TXMC for showing me that. And that we were able to go through this whole structure in here, and the big scary event occurs right here at the end. Those are all positive signs to me of capitulation, that we see stable coins become worth more than $1 because the demand for them gets so high, that we have a really scary narrative, that we see the DXY hit a 0.618 Fibonacci retracement, and we see gold hit a 702 Fibonacci retracement, both of them being safe havens to flock to during the panic. All of those things are screaming to me that, we're in capitulation. Fear is maximum right now. We've watched the Bitcoin shorts and we've noticed that they haven't done anything, right? Shorts were at their all-time low back in May and April when the top was coming in. Then shorts were at their record lows over here back in November when the top was coming in. Shorts have never done anything meaningful, but we can see right now we're starting to see somewhat of a breakout happening here in people shorting Bitcoin, which we know people have a tendency to short the bottom and not the top of the market. When the shorts are very low, this has been the top of the market. And when the shorts are high and when the shorts are surging, that's people panic shorting the bottom of the market in each of these circumstances. And we see a breakout in shorts happening right now. So all of those things seem capitulative to me. But what we know is all of this price action started the moment this geopolitical event began last night. It's still fresh. It's still new. I'm hesitant to even call this a narrative because it's very sad. I could never imagine, and I have been imagining it in the last 24 hours, what it would be like being a father that I am right now and having, small children right now, and something like that occurring in my country. It would just be absolutely horrendous. So I'm very sympathetic to the situation that is happening, and I have no capability to understand it in a manner that these people understand it. And so I certainly want to be respectful because it's very difficult. I'm certain it is a horrendous thing. I've seen some videos of, fathers with their children, and it's awful. So I don't want anything I'm saying to be viewed as insensitive to the situation because I'm very sensitive to it. I am doing my best to wrap my head around it and coming at it from the aspect of being a father myself and how difficult that has to be. But when I come at it from being, let's take a look at the markets, let's take a look at the charts, and, what are the charts saying? The charts say, hey, we just had this extremely capitulative moment happen where a bunch of people flocked to the dollar, a bunch of people flocked to gold. We can see some equities getting their 70% drawdowns like we've seen happen before in previous bubble pops. At those moments, those typically bounce. We see Bitcoin still holding the structure technically, all while, this big climatic event occurs right when the stock market makes a wave of equal length after an ABC style correction with a 702 retracement at the B leg. So for all of our sakes, I'm rooting for us to continue holding in here and to give us some relief soon. But as we know, we've been following the inverse price chart of Bitcoin for nearly a year at this point, and we know what that structure can look like in here, and whether or not we're going to get that or not. If we got it, logic tells me there's probably some more pain over there in the altcoin market based on what we've seen already. But it looks like it wouldn't be too far away. And we can see how quickly relief did come in here. And we see that on all the different structures that we've looked at like this, that relief would come in pretty quickly afterwards. But I would have to say that seems like a lot of things happening at the same time for capitulation. We talk about confluences in the market. Those were a lot of confluences to see the DXY hit the 0.618, to see gold hit the 702, to see the Dow have an ABC with waves of equal length, with the B leg hitting a 702, and then the big event occurring right there at the end of wave C, to see some equities hitting their 70% markers that typically happen before a big relief bounce comes in for those, along with seeing those stable coins become worth more than $1 because their demand was so high. So that's a lot of things to happen all at one time. Even a couple of altcoins have already turned green, and Bitcoin is not too far of recovering everything that it's lost, when at one point it was down 2,900, and here just a second ago it was down only 100. So intense time for sure. Either way, I still look for the retracement rally to come in here for Bitcoin. Still looking for the altcoins to have their retracement or to have their run into that retracement, regardless of if Bitcoin remains to hold this and we have some 30-day alt season come in, or if it's more along the lines of having to be a more grueling, drawn out one. Still, my views stay the same. So long as the Dow Jones can hold itself, it's something we've seen happen before within the Dow Jones. And if it recovers and it fires off, we've proven it time and time again that crypto has a tendency to follow the stock market. So an intense time for sure. A lot of confluences happening in the market at the exact same time, and really just a wild 24-hour period. And with Bitcoin only being down $179 for the day at this point, if this thing turns green, that will be a pretty amazing candle close. So nothing is broken yet, except for maybe our psychology. But even then, you can look at it. Bitcoin is now flashing green. So I'll go ahead and wrap this thing up. This was a challenging video because this is obviously a very unique situation that we're dealing with just in markets in general and in geopolitical terms, and wanting to be respectful, but at the same time also recognizing there's a lot of pain, there's a lot of fear, there's a lot of panic. But also there's people's lives who are actually really being impacted right now physically from this. And, I'm on the other side of the world from where all of this is occurring, and people who are in neighboring countries are probably a little worried, and people who are directly involved in these countries are very worried. And, I did my best. So I won't run through everything today. I hope that you guys are doing well out there. Hope everybody is staying safe out there. I'm sure I have viewers out there on that side of the world who are involved in all of this, and I wish you all the best and you stay safe. And I want to thank you guys so much for watching. Of course, you guys can check out bcbacker.com for my course where I talk about the previous Bitcoin and cryptocurrency cycles. You can follow me over here on Twitter at bcbacker, and I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.